Hello and welcome back to Soar Financial. Here, back from the studio in Frankfurt, Germany. It is my pleasure to welcome Professor Steve Hanke in a few short seconds. I'm excited to catch up with him again. It's the second time on the program, and we have a doozy prepared for you. We got lots of interesting topics that we need to touch on. A couple of them are just the U.S. buying Argentine pesos right before the midterm election. Was that insider trading? A bit of a provocative question here, but also what's the status on the de-dollarization trend? Has it stopped? Is it accelerating? Something I'll definitely discuss with Professor Hanke here. Also, we need to discuss the tariffs, mainly the $2,000 tariff dividend, but also what does a possible reversion of the tariffs by the Supreme Court mean? How does it impact markets? How does it impact the U.S. economy and household in particular, the U.S. finances? We all know debts are spiraling out of control. If we have to repay, or if the U.S. has to pay back another $1 trillion, which it might not have ever received, what does that mean? What are the impacts? Before I switch over to my guest, hit that like and subscribe button. It means a lot to us. And also, by the way, I meant to mention, it also means a lot to us when you walk up to us at conferences and say hello. It means a lot. It means we're reaching the right audience and we're having an impact. So thank you for that. Professor Hanke, it is a great pleasure to welcome you back on SOAR Financially. It's good to see you again.
Good to see you, Kai.
Yeah, Professor Hanke, we have lots of topics to discuss in a very short time period. Let's dive right in. First topic I mentioned is sort of the de-dollarization theme, and I want to start with Argentina. Right before the midterm elections in Argentina, the U.S. made an interesting purchase. They bought $20 billion worth of Argentine pesos. Can you elaborate for us? What is the meaning of that?
Well, what happened is the peso got in trouble, as it often does, and President Trump, a big supporter of President Milei in Argentina, and the reason for that is geopolitical as much as anything else, and that is that China has made significant inroads in Latin America, and the so-called pink tide, the leftist governments are also influential in Latin America. That would be Venezuela, Colombia, and Brazil, just to name three. And as a result of that, Trump has kind of pivoted a little bit towards Latin America, pivoted away from China and towards Latin America. And so this was, a swap arrangement with the U.S. Treasury and the Banco Central in Buenos Aires to support the peso. I think it was a bad move because these support operations always end up in failure, and the reason they do is that no one wants to be in the peso. And if you look at the debt incurred since 1995 in Argentina, that would be about $177 billion worth of debt. Almost 75% of that leaks out almost immediately through the back door in the form of capital flight. So there's very little left of the debt incurred that gets actually put to use in Argentina. And as a result of that, they can't service their debt, and you can go through the arithmetic, guys. Assume you borrowed $100, and the interest rate on the $100 was 8%, which is roughly the interest rate on debt that the average interest rate on the debt that's been incurred by Argentina. That means to service it, you've got to be generating $8 every year in free cash flow to service the debt. And if you're investing the 100 you borrow and in some project or some mechanism that generates 8, you can service the debt. But if 75% of that 100 is leaving in terms of capital flight and you're only left with $25 to invest out of the 100, you've got to make a 32% rate of return to generate 8 to service the debt. Well, that little arithmetic exercise shows you why the biggest debt in the world is Argentina. And they go into debt. They've defaulted on their debt repeatedly, not only foreign debt, but domestic debt. They've actually defaulted on domestic debt too. So it's all the peso problem. It's a peso problem. And what they should do is something I've been actually advocating since 1991, when I was advising President Menem from 1989 to 1999. I was always beating the drum. They should get rid of the peso and dollarize. Use the U.S. dollar. And if they would do that, of course, you wouldn't have capital flight. Why would you want to? Why would you want to get out of the country? You'd be in dollars. Everything would be in dollars. So that's the long and the short. I think it was a bad move, a bad bailout move that won't solve any problem. The only solution to the problem, to stop the capital flight, keep capital in, have a confidence shock, a booming economy, would be to dollarize the economy.
It comes at an interesting time as well, because I remember just about 12 months ago, before Milei shut it down, the BRICS were courting Argentina as well to potentially join them, and now the U.S. is the strongest ally of Argentina. What kind of signal is that sending as well in terms of the de-dollarization or dollarization trend here?
Well, this is a U.S. pivot going on, and part of the strategy to counter, if you will, a de-dollarization movement, or the global South, or the BRICS, or the coalition with China, Russia, and so forth, is to dollarize, to have a proactive pro-dollarization strategy. And I've gone through screening of countries that would be potential, and we've got a list of 50 that would be much better off if they got rid of their local currencies and their local central banks that do nothing more than just destabilize these countries, and replace it with the US dollar, which, by the way, most of these countries de facto are already dollarized. If you go to any place in Latin America, or virtually any developed world, there are plenty of dollars under the mattress. In fact, about 70% of all the U.S. dollar notes are in foreign hands. They're not in the United States. Most of the paper money that's circulating, the U.S. dollar, is circulating in foreign lands.
Now, it is an interesting topic at the de-dollarization, because the BRICS are getting rid of their dollars, while South America, and I remember you've been talking about Ecuador or El Salvador, I believe it was, that was introducing the U.S. dollar back then. And I think, I've listened to your interview with David Lynn, who I hold in high esteem, about a week ago. And you mentioned you have a list of 50 countries that should potentially think about dollarizing, perhaps. What is the trigger for that list? And why are these countries that are on that list suitable for potential dollarization?
Well, they have a lot of economic instability, currency crises, banking crises, high inflations, high fiscal deficits, and large capital flight, just to name a few. And I've studied this in some detail, and if you look over long periods of time, just two things come to mind. If you get rid of the local currency, you're going to have lower fiscal deficits, higher economic growth, and lower inflation. So those are just three things right off the top of my head. Now, by the way, one thing about the de-dollarization, there's more hype around this than you can shake a stick at, because if you actually look at the transactions that take place internationally from 2022 to 2025, the current period, the U.S. dollars influence, its dominance in those transactions has actually increased. It's gone from 88.4% to 89.2%. The euro, you're there in Frankfurt with the euro, stuck with the euro now. It's actually gone down from 30.6% to 28.9%. The RMB, the Chinese yuan, has actually gone up from 7.2% to 8.5%. So what you've had, the US dollar is the king, and it's actually increasing, not decreasing, not de-dollarizing. It's actually increasing. The euro is slipping, and who's taking up that space is the Chinese yuan.
You know, when we talk about capital rotation, where the next big wave of money is heading, it's not just gold or silver that's catching attention. There's a really interesting public market story developing in crypto right now. This episode is sponsored by Upexi, ticker symbol UPXI on the NASDAQ. Upexi has quietly built the largest Solana treasury of any public company. Yes, the largest. And they're treating it like a real yield-generating asset. Earlier this year, they closed $100 million financing to expand their crypto operations, and today they hold just over 2 million SOLs, worth roughly $447 million, mostly staked and earning right around 8% yield. That's over $100,000 a day in revenue just from staking. Since launching their treasury, Upexi's adjusted SOL per share has more than doubled, and they're expanding into the ecosystem too, investing in Alpha Exchange, an AI trading platform, and bringing on Arthur Hayes as the first member of their new advisory committee. It's one of the few traditional public companies truly leaning into this digital asset shift. Check them out at ir.upexi.com. That's UPEXI on the NASDAQ, UPXI. Disclosure? Paid partnership with Upexi. This is not financial advice, so always do your own research. Now, let's jump back into the conversation. So I was going to ask, maybe to follow up, maybe to specify, like, what is driving that, Professor Hanke? Like, why is the U.S. dollar, despite the mainstream narrative, increasing in percentage here?
Well, this is a trend. Most people don't realize it. The world always, if you go back 2,500 years, there's always one currency that's the international currency that dominates, and we've only had 14 of them, by the way. If you go back 2,500 years, you'll find there are 14 currencies that fall into the international currency dominance picture. The U.S. dollar is the dominant one, and one reason that it's hard to challenge is the networking effects. They're very strong, and it's a matter of scale. Once you dominate, it's really hard to challenge the king and knock the king off the throne. And you can see that if you go back that far, 2,500 years, and you only have 14 of them. And the only way they get knocked off is usually wars, bad economic policy associated with mainly with wars.
Can I turn that around on you? You just maybe bad economic policies force de-dollarization, or not just de-dollarization, but a change in currencies or in the financial monetary system here. I'm trying to phrase the question because the Fed has been keeping the rates fairly high, and now that the Fed has signaled that they might be done cutting, the Dixie increased, meaning the U.S. dollar index, which is a basket of currencies, of course. But it shows that the U.S. dollar, because the interest rates are higher, is still attractive for foreign capital to be invested in. Is that sort of part of that trend as well? And I hope that question makes sense here.
Well, it's a little that's part of it. Okay. That's consistent. That's consistent with more dollar transactions. But the real elephant in the room is capital markets, and the dominant capital market in the world, by far over 50% of all the world's capitalization in stock markets is in New York. Everyone wants to be in the dollar, and they want to be in the U.S. capital markets. End of story. Now, if you look at the hottest thing going, it's anything connected with AI, for example. And where is that? Well, it's all in the United States.
So to jump in there, sorry, Professor Hanke, but an interesting point, like AI and tech supremacy. We've had the U.S. having the military might and maybe military supremacy, which is seemingly waning. China is gearing up, but is AI and tech maybe the next supremacy factor here that maybe secures the standing of the U.S. On a global basis?
Well, the U.S. will be competitive in that field. They're probably out ahead now. I think the challenge really in that realm is going to be China, and I think if I was betting, I would say China is probably going to win that race. but both of them will be very competitive, and then if you throw Europe in there, Europe just doesn't amount to anything. You can hardly find it. And then every place else, I mean, you can basically forget it. So it's the capital markets, though. It's not only the equity markets, but the bond market, the most liquid, huge bond market in the world. It's in U.S. dollars. And if you're a foreign country, what their debt is accumulated in what? U.S. dollars. If you go to any of these developing countries, the main source of debt is U.S. dollar denominated debt. You got China in there a little bit. That's one reason the Chinese yuan, the transactions have increased a little bit. But look, you've got where's the Chinese yuan compared to the U.S. and now the financial transactions 8.5% in the yuan, 89.2% in the U.S. dollar. So it's way down.
China is catching up. They're using leverage. I'm not sure if you've seen the deal China struck on iron ore trade with BHP. A lot of investors or a lot of members of the financial community mentioned that's sort of a bit of a signal that China is using leverage and maybe to bully companies into a yuan or renminbi-based deals. Do you see that trend to continue? Are they using their leverage?
Yeah, they're using it and they're growing. But again, in the financial sphere, it's way behind. I mean, it's running in third place, way behind. Even Europe. I mean, the euro 28.9% of all transactions, and the yuan is only 8.5. So.
Maybe last question on the whole dollarization topic, but do you see a tipping point where the yuan becomes relevant at some point? Is there a certain percentage where you got to think, okay, now the renminbi is a worthy, let's call it opponent or worthy part of the system?
The key thing, and by the way, I'm associated with Renmin University in Beijing, and that's precisely what I've been working on. Is how you promote the use of the Chinese yuan. Nobel laureate Robert Mundell and I, the late Mundell, as well as Ron McKinnon at Stanford University, the three of us, that was our charge at Renmin. I'm the only one left, but because both, unfortunately, the Grim Reaper caught up with McKinnon and Mundell, but hasn't got me yet. So the key is, to answer your question, they have to get rid of exchange controls and capital controls. There's no way you can be an international currency of any significance, really, if you have exchange controls.
Fair enough. It makes sense. Do you see that happening at all? Because that would sort of go against everything that China stands for, I guess, and against the political system.
Well, I've been advocating it, but so far the advocate has been losing.
No, fair enough. Let's put a bow around the de-dollarization topic. We need to talk tariffs, or actually the ripple effects from the whole tariff debate. One of them is the $2,000 tariff dividend. And Professor Hanke, I'm wondering, is this just political theater, or is that something that will actually happen?
Well, what's happening with the protectionist tariff war, if you want to call it that, is that one thing that's been advertised is this is going to bring a lot of revenue into the United States. That's one thing Trump is on. The problem is now it's clear there's going to be a lot of leakage of that revenue. It's a little like capital flight, and the leakage comes from there's going to be a huge subsidy to farmers that takes place because of the farmers as a result of the tariff war. What happens? We threaten China with tariffs. We put tariffs on China, and China says, bye bye, we're not going to buy any more soybeans from you. And so China knows the choke points, and a lot of the choke points are in agriculture because you've got all the middle part of the United States, they're growing soybeans, and it's the biggest agricultural export the U.S. has. And as a result of that, of course, Trump backs off of China. Number one, these threats have reduced, and in the meantime, domestically, he's got the farmers raising Cain with him because they're getting killed because the soybean price is down and they're not exporting soybeans. So the subsidies are going into the farms. And now he's also to try to gain support for his tariff wars. He said that every U.S. adult will receive $2,000 in tariff dividend. So that's another leakage. And then there are other special interest groups that are being hurt by the tariffs, and they want to be bailed out. So we don't really know where the net number is going to be, but the top line number, forget it. There's a lot of leakage occurring, and it will be very messy to arrange for these dividends and subsidies and bailouts to occur. So he's just making a terrible mess out of the whole thing. The tariff policies are completely wrong-headed in the first place, but they are going to create a bureaucratic and administrative mess on top of it with the bailouts and the so-called leakage.
Yeah, we talked about the tariffs in our previous interview here, and I would advise everybody to go check out that conversation. I just quickly want to talk about the fallout from the tariff dividend announcement, because all of a sudden gold is stronger again. I haven't looked up Bitcoin or anything, because it reminded me a bit of the COVID, I would call it a bailout, but maybe subsidies here. The flush of fresh new money into a system that nobody expected to have. Do you expect prices of like real assets or hard assets to increase again?
Well, this depends on really what the Fed does. Now, remember when COVID came around, the government ran huge deficits, and but this was in 2020 and 2021, and the Fed was the one that bought about 90% of the U.S. Treasury bonds that were sold to finance those huge deficits. So the Fed monetized the deficits. The money supply shot up as a result, and with a typical lag, inflation reared its ugly head. And now what we have the deficits look like they're going to be 6 to 7% of GDP as far as the eye can see. So that pressures the Fed. There'll be tremendous pressure on the Fed to buy some of these treasuries. And we have the second thing that is related to that is that in December, quantitative easing will be done away with at the Fed. They didn't say they were going to do quantitative easing, but quantitative tightening will be out. And then the third big thing is that the supplemental liquidity ratios that are put on banks will be done away with, which will give the banks more capacity to make loans. So you've got three things tilting us towards maybe overdoing it and increasing that money supply. Now it's growing at it's growing at 4.5% per year. Hanke's golden growth rate, a rate consistent with hitting a 2% inflation target in the United States, is 6%. So the question is, well, will the quantitative tightening being eliminated and the supplemental liquidity ratio being done away with at commercial banks, and this overhang of this huge deficit, with the White House putting lots of pressure to loosen up monetary policy, will the Fed end up overdoing it and getting that money supply growing up at a rate significantly higher than 6% per year? If that happens, then we're off to the races again. And the next thing that will happen, that will support asset price increases.
No, it's a good point. So the tariffs,
and then we'll have the inflation problem facing us. So we don't know exactly, but I'm just saying the deck's being stacked up in such a way that maybe instead of being on this glide path down with contraction of the money supply, slow money supply growth, inflation going down, we might be looking at a pivot here.
Well, inflation has been going up since April. It's been constant. Every month we've ticked up 0.1, 0.2% here. Now we're at 3.1% CPI. Based on, like, Jerome Powell's blaming the tariffs, of course, seeping through here. Which brings me back to the tariffs, actually, because we need to talk about a potential Supreme Court decision here in the new year, which could sort of put the tariffs, out of commission, for lack of a better term, or reverse the tariffs that President Trump has put up. What do you make of that? Like, how dangerous is that to the U.S. financial system and the economy?
Well, I think that the Supreme Court, if logic was governing things, the tariffs would be deemed illegal because they certainly don't fall under this emergency legislation of 1977. The trade deficit is not an emergency. We have had the trade deficit since 1975 every year in the United States, and that is caused not by some foreign element. That the Emergency Act is if some foreigner is doing something that affects the United States. That's when you invoke or can use the emergency, and that emergency is just not there because the deficits are created, trade deficits are created by Americans spending more than they produces a trade deficit. So the origin of the trade deficit is America. It isn't some foreigner. And this 1977 law is targeted on things that foreigners do. The emergency can only arise if a foreigner does something to America, and then you can impose a law. Now, as it turns out, by the way, the emergency law is a bad law. All these emergencies are, because we've actually had this emergency law, the International Emergency Economic Powers Act is what it's called. It's been invoked 69 times since it was introduced in 1977, but 39 of those emergencies still exist. They don't go away. 57% of the so-called emergencies we've had in the United States, they stay and have a life that is a lot longer than any emergency. So the whole thing is complete nonsense, and I don't think that the Supreme Court, they're going to have to really twist not to indicate that this is illegal. So what happens then? Well, Trump will try to impose these tariffs using other laws, and it will be extremely messy. So there'll be a tremendous amount of uncertainty if they say at the Supreme Court that it's illegal, which I think logically should. I don't know whether they will, obviously, but if they say it's illegal, then things will really get messy, because Trump will try to continue to do what he's doing, and he'll be able to find other laws that he can use to impose the tariffs he's already imposed. But it will be very uncertain and unclear what's going on for many months.
In summary, it's all great for gold, right?
Oh yeah, no question about it. I mean, I think the secular bull will end up peaking out. I think around $6,000 an ounce.
Fantastic.
Right now we've had a little pullback. It's stuck around 4,000. It's consolidating around 4,000, which seems to be, they're sticking to it like flies stick to fly paper, 4,000. So, but it's going up because the ratio of calls to puts at 4,000, with the contracts ending November 24th, it's about 2 to 1. The calls outnumber the puts by about 2 to 1. So that means the market thinks that its price is going up. It might be consolidating at 4,000, but they think it's going to go higher, not lower.
From a miner perspective, I absolutely love 4,000. I don't mind the consolidation phase right now. Margins are insane for the mining companies. So I'm a happy camper personally. So when it comes to that, Professor Hanke, what a wonderful conversation. You're a wealth of knowledge. I tremendously appreciate your time. If our audience doesn't know where to find your work yet, where can we send them?
Well, you can follow me in real time on X at Steve_Hanke. And if somebody wants to be put onto my regular distribution list, they just send me an email at hanke@jhu.edu.
Fantastic. I advise everybody to do that. I strongly advise, and tremendously appreciate your time. Professor Hanke, thank you so much for coming on. Can't wait to do this again very soon. Perhaps in early 2026, we can provide our audience with a bit of an outlook. What should we be expecting? Because the Supreme Court decision is looming over us. I believe it is happening in early September, in early January in early 2026. I don't have the exact date in front of me, so it'll be interesting. As you said, it'll be wild. To paraphrase, tremendously appreciate it. And
thanks so much. Thanks so much for having me on. Look forward to seeing you next year.
Yeah, likewise, Professor Hanke. Thank you so much, and everybody else, thank you so much for tuning in. Very, very interesting discussion with Professor Hanke. If you enjoyed this conversation, please hit that like and subscribe button so we can bring guests like Professor Hanke back onto the program. And also, in the comments, let us know, what do you think is going to happen if the Supreme Court reverses the tariffs? What is going to happen? Really curious what you think, and let me know. I read all the comments. Not always great, but I do, and I tremendously appreciate them. So thanks so much for tuning in. We'll be back with lots more. Take care out there.